Marketing, Chapter 2, Price. Objectives of pricing. Survival is the basic objective of any business. In order to continue their existence, organizations may tolerate short run losses. If they are facing continuous loss, it will be difficult to run their business. But to obtain working capital for uninterrupted operations and sustainability, appropriate pricing for the product is very necessary. Appropriate means suitable or proper price in the circumstances, that is, what is happening in the current situation. According to that, they will fix the price. Every firm should carefully set pricing objectives so there is clarity and consistency in the firm with respect to the pricing in the long run. According to the product only, firm has to set the price. Though the firm is producing good quality product, packaging, everything is good, but the price is not reasonable means the firm cannot lead for the long run. The objectives of the pricing are as follows. First one is profitability objectives. Target rate of return on investment or net sales. This is an important goal of pricing policy of many firms. The price represents cost of production and profit margin. See, in this what they are saying is what we are investing on our company, that is as our capital. If we are going to invest 1 lakh for as a capital, means we have to get double the benefit as a profit. So then only our company will run in a profit, or otherwise it is a loss for our company. So we have to gain double the benefit. Next one is profit maximization. Profit maximization is an important objective for any business for its survival. In recent times, business philosophy has changed. Businessmen have started to think from the perspective of society instead of only focusing on maximizing profits. Before and all, what happened means they used to focus only on the profit base and they used to produce the goods. But nowadays, businessmen are focusing on the customer. According to the taste and preferences, they are producing the product which is liked by the customer, and automatically the business people will be benefit from that as a profit. Next is market related objectives, meeting or preventing competition in the market. To prevent competition in the market, they will sell the products at low cost. They will be ready to sell it for below cost pricing also. For example, if a product has been sold at a price rate of rupees 10, we can take the example of a soap also. To prevent competition in the market, they will be ready to sell that product for the half the cost, that is 5 rupees, so that they will be preventing competition in the market, and at the same time customers also will be ready to buy their product and get benefited from that. Next one is maintaining or improving market share. What do you mean by market share? Market share represents the percentage of an industry or a marketer's total sale that is earned by a particular company over a specific time period. Market share will be calculated by taking the company's sales over the period and dividing it by the total sales of the industry over the same period. So, price objective helps to maintain the market share, that is either to increase or sometimes to decrease it. This pricing objective is followed by the firms for expanding markets. When market has a potential for growth, then market share will be the better indicator for the firm rather than focusing on target return on investment. Therefore, this is a worthwhile pricing objective for firms operating in expanding the markets. Next one is price stabilization. Price stabilization as an objective is prevalent in industries that have a price leader. For example, in an oligopoly, there are only a few sellers which follow one big seller who acts as a price leader and try to stabilize their prices simultaneously. Oligopoly means a state of limited competition in which a market is shared by a small number of producers or sellers. So what they are saying is, for example, in a place there will be only 10 producers or sellers, and for the 10 producers or sellers there will be a one price leader who will be fixing the price for everyone, and this has to be followed by the other producers or sellers. They will not be having any competition, that is, they will not be having any price wars. What has been fixed by the price leader, it will be followed by the other person. So by this, price stability helps in planned and regular production in long run. Next one is public relations objectives. Enhancing public image of the firm. First, a company has to create good image among the public. Once they have created that image means, then whatever the company produces as a product, it will be accepted by the public blindly. For example, if they are going to produce any product with high price also, it will be accepted by the public because that company has created a good image. And the secondary thing is, once the company is producing only the good quality product with a good price, and suddenly if they are going to produce any low quality products with low price means, then they will be losing the customer. And the last one is resource mobilization. Resource mobilization meaning is, it refers to all activities involved in securing new and additional resources in an organization. It also involves making better use of and maximizing existing resources. In simple word, we can say it is a new business development. For this case, prices are deliberately set high in certain cases to generate surplus for reinvestment in the same firm.